Michael, what do you think of this brewing trade war? I mean, can we call it a trade war now?
Well, we've been wondering when the trade rhetoric was going to impact markets, and maybe today we're beginning to get the answer. And so this is, I think, the first step in escalation. It's much broader than the steel tariffs now. And when you look back to kind of 2003, 2004, we've been through trade scuffles before and been pretty unscathed. But this looks like escalation, and it's going to be quite difficult from here to see sort of what puts the cat back in the bag for trade war as a theme.
So what's the strategy? What do I do? I'm running money. Where do I put it?
Well, look, I mean, as you said at the top of the open, it's anyone that's sensitive to trade, and so the money's going to go back into small caps. It's going to come out of Asia, I suspect. Emerging markets going to be under pressure. Australian dollar's going to be under pressure. Small open economies, and actually, the U.S. actually will probably do okay. So,
kind of, is there a place to hide? We've been debating this. Kind of, where is the point at which, where is the point of safety? Is it the front end of the U.S. curve? Is it the U.S. 10-year? Is it bonds? Kind of, where's the? If I'm moving money out of these places, am I putting it into cash or am I putting it somewhere else?
Well, no, you're putting it into domestically oriented industries and things like small caps. I mean, I think bonds. I mean, the interesting thing to watch really closely is what happens to inflation. Because in theory, a trade war, is stagflationary and it's negative for growth. Potentially, big increases to inflation. We're not quite sure where the inflation will come because the global supply chain is so interconnected. So there will be some uncertainty as to where some of these effects hit. I mean, look, the one thing I would say is right now, this is all still in draft form. But given the response of the Chinese, it's difficult to see, and the political environment in the U.S., it's difficult to see how we back out of it. But yeah, I mean, I think there's definitely still places to put money. It's just a question of trying to avoid the really trade-sensitive areas.
Why aren't we seeing a bigger bid for safe haven assets? I mean, I can still buy 109, almost 110 yen for $1. That's a pretty decent amount, and gold still only has a 12 handle on it. I mean, if people are freaked out, and I guess one question is, should they be? Why aren't they buying these kind of safe haven assets in bigger size?
Yeah, I mean, look, this is still in draft form, so I mean, I think if we look back on this in 6 months' time, and we've had a huge escalation with maybe even other parties getting involved other than the U.S. and China, and just a full-scale trade war, you might look back at that and say, well, yes, this was the sort of the second or third step that got us towards that. So I don't think it's a outright panic right now, but I do think this is the first time really this year that the possibility of a trade war is really seriously impacting markets, because before then, the impact had been quite modest. So, this is just the first step, and that's probably why you don't get an immediate bid for safe havens. And look, I think the other thing, in terms of the yen, of course, is that the yen traditionally is a safe haven, but it's usually a safe haven on the grounds that we expect Japanese investors to bring money home. This isn't that kind of shock, and so, there is an open question as to whether the yen should be a safe haven. If it in fact a global trade war, because Japan obviously is a major exporter.